Hello, YouTube. The S&P is leaving big gaps in the chart. We're noticing the charts are breaking down, or we're putting in fresh lows. Jerome Powell might have done more than what he thought he did yesterday. We note that fear is back. We're all the way down to 40 on the close. Stocks are quite red, and we're not looking like we're repeating the seasonality chart. We did not go up. We just went down and then down more. So we're trying to ask ourselves whether or not this could be the big one. What's the big one? The big sell-off. It could be a 10% drop. 1, 2, 3, 4. 1, 2, 3. So far, it's pretty red. So we're going to go through and talk about that. And we're just getting this headline here that Jerome Powell is going to be hosting a town hall with educators in a Q&A on September 28th. So we'll see whether or not this is Dr. Doom or whether or not we might get some sweet, sweet relief to close the month out. We're also going to go through a quote from Bruce Lee, because in times like this, it is very easy to get chopped up. But what I want to leave you with is a message of hope. What I want to start off with here, though, is that before we look at that one pattern that really matters, I want you to pay attention to the charts here. So we're going to look at every chart that matters, and I want you to note that they're all below their blue line. S&P 500, below. QQQ, below. SMH, or chips, below. NVIDIA, below. Apple, below. Tesla, 1 cent below. FXI, or China, below. Microsoft, below. ARC, below. DAX, below. Canada, below. 2% red. That's a big sell. Negative almost 2 for emerging markets. The Nikkei is also back below the 50 DMA. Ether is below its 50 DMA by a long shot. So was Bitcoin. So every chart appears like it's breaking. But in times like this, we really, really, really want to be like Bruce Lee. So I'll show you that one chart that really matters right now. And then as we go through the show, I want you to think about this. So there's this weekly chart, which is really important, which is going to feed through to our monthly chart. So in this one here, it's very important, but this one here is even more important for me. Why? Because what I was looking for was for the low to hold. And as of right now, 43.35, we're here at 43.29. It's a little bit lower. Technically, the low did not hold, which is so important for me, but I do not want to count this down and out until we actually close the month below here, which means we have to wait for another roughly 10 days to actually see this confirmation. And I think people could be quite surprised. So let's just see whether or not this pattern is going to hold. This is my North Star right now, though. And I have to make sure I'm going to be patient, like Bruce Lee tells us, and we'll read this in a moment, to be like water. Why? Because emotions are high. And when we're on strong support, people like to sell. If we look here a little bit objectively, too, we can see a perfect dance between the Fibonacci areas, which is 45.34 and 4311.69. Why is this so important? Well, because robots do most of the trading. We're going to pop over here to SPY. Now we'll look at one key area too. It's this one right here. It's 431.76. That's our August 2022 high. Where are we right now? Well, we're below it. We're at 431.02. So we pierced it. We're below it. It does not look good. If we go over here to our weekly chart on S&P, the reason why I originally had my bear thesis was that I thought we were going to do this. I thought we were going to repeat the yellow box. I ended up being wrong. So we have our 3 red weeks like we do here. So we note 3 red weeks. Can't say that. 3 red weeks, 1 dead cat bounce, bearish engulfing. That's the pattern right here. Happened again on the yellow one. It did not happen here. What do we have? Well, let's delete and let's have a look here and see. We got 3 down weeks, 2 hollow weeks, basically 2 inside bars, and then the sell-off. So what does that mean? We basically bounced off of our 5% dip. We rallied back up to form a lower high, tried to save it, found consolidation, and the coil released. That's what I mentioned too. The stage was set where the coil was going to release. So what I'm watching for is the potential for us to slam down here to 41.42 if we're not able to rally back up and close this weekly candle back above that key relative low. And that is how those weekly charts can feed through to this monthly chart. I'm going to ask you for a huge favor. If you could please consider smashing that thumbs up and subscribing to the channel, I would really, really appreciate that. Thank you ahead of time for all the support you guys have given me. I really appreciate it. So even though this might be difficult, we have to exercise patience. And what I mean by patience is we want to use the word like this, P-A-Y-T-I-E-N. Oh, I can't spell. There we go. Patience, P-A-Y. So make sure you add that Y in there. If you want to get paid, you got to make sure you got patience, which means don't count this chart down and out. But here are the warning signs because we definitely have some. So if we go back in time, well, this is not currently acting as support as I would have expected it to. We tapped 433 multiple times today. And every time we tap an area, it means people who wanted to buy it had a chance, had another chance, had another chance, had one more chance. And then they're like, oh man, I've already bought everything I want. Let me blow it out. So that's how we went to the low of the day, closing at the low. This is bearish. I'm not going to try to twist the story here. What we also want to understand is something I mentioned when we went all the way back up to the high here, where we left a gap and then the fade started. Well, what did we do here? Well, we just left a gap. I thought we were going to gap down, pump up. I purchased some stock today. You don't see me saying that I've got sour grapes or I'm complaining today. It's a red day. Everything's red. Look at the heat map. Yeah, you bought anything, you're red, right? It's a bloody day out there. And on days like this, it's very easy to fall back into those same old traps where we do what we used to do. So if we understand that the potential here is quite high, if we go back in time, all the way back to when the rally started, we had a gap here. We have a gap here. We have another one. And that one got filled. This one got filled. So those two are filled now. But as we were starting our meteoric rise, we left a few gaps. And people were surprised, myself included. Normally they get filled. Well, if this is it, we're probably going to go to fill all these gaps now. If if we're truly going back to the bear, we have to go all the way back down to roughly 400 to fill this lower gap here. That's like a lot lower than where we are right now. What would that really form? It would form a massive M. So let's go through here, right? Don't tell me that. Well, I don't want to lie to you. I want to tell you what I'm noticing. And as the data changes, my template changes. So I said that this is going to be a difficult move for the bulls. Why? Because we're going to be buying here. Again, I bought yesterday. I bought a little bit more this morning. But hey, obviously I'm losing money. We're down 4% on the month. And what I mentioned is that I did not want to trade the short side. Even though I saw more opportunity going short, I was going to be covering at the monthly higher low. I still personally believe there is a better risk reward that if the pattern plays out, whether it's perfect or not, like we noticed on that weekly chart, it was not perfect. For us to go up, I'm going to give it time. I'm going to give it till October, but I'm not blindly bullish either. What this means is that if the pattern breaks, I'm going to be listening to it. But as we were starting the month out, I said, we have to be ready to stomach a move all the way down to the low. What does that mean? I only have about 50% of my primary account invested. I have about a roughly 20% hedge on. And what that means is that if I remove my hedge and I buy, I can actually roughly double my account, which means I have roughly 50% in cash and in hedges. So if we're going lower and we also go higher into October, I will buy. If we don't, though, I'm going to let my stops hit. I'm not going to adjust anything. My stops are going to hit, and that's just going to be it. For my retirement account, I'm retiring for the next 30 years, which means I don't really care about this one candle or this candle or these ones. I just want to keep averaging in over time, dollar cost averaging, because over time, the market goes up. And if you look at SPX, that's the story we want to ask ourselves here. But this is not easy. Look at a log scale. We can note that, oh my God, right? Do you even notice the dips? I don't. Do you still think America is the best game in town? I do. So even if it's going to be like a period like here, like 20 years of lost, we want to make sure we're very mindful that we don't want to try to time things too much. Time in the market, not timing the market. So now what I want to do is I want to go to read this Bruce Lee quote to see whether or not we can learn from a master. Why? Because this guy is smart. He's no longer with us, but he is smart. Be like water. Empty your mind. Be formless, shapeless, like water. You put water in a cup, it becomes the cup. You put water in a bottle, it becomes the bottle. You put water in a teapot, it becomes the teapot. Water can flow or it can crash, just like stocks. Be water, my friend. What does that mean? Be flexible, be nimble, understand what your template is, or what your North Star or guide is, your template, whatever you want to call it, and then be receptive to the idea you could be wrong. I've said that from the very beginning. I know where I'm wrong. I start to be wrong if the pattern plays out, but then we don't hold the low, which means now I've got a big question mark here. I don't know. If they save it and we rally back up, it might be this. It might be this right here where we get that marginal lower low and then we snap right back. We could be ahead of the schedule. We could be behind the schedule. Man, I don't know. I have no idea. So when we look here, and I'm saying I don't know. I have no idea. And I know you guys don't like that, but I'm not trying to pretend like I know everything. When I feel confident, I will exert confidence. When I'm feeling less confident, like today, like right now, I will tell you why I'm less confident. What I wanted to see was us to go back into greed, to save the low, and then to push off. That did not happen. We were neutral a month ago, a week ago. Yesterday, we fell into greed today. Sorry, fell into fear. That's not good. The charts are breaking. Everything's selling off. It's not a US story. It's an everything story. S&P, NASDAQ, chips, NVIDIA, Apple, Tesla, China, Microsoft, growth stocks like Cathie Woods, Germany, Canada, emerging markets, Japan, Ethereum, Bitcoin, they're all below the 50 DMA, but some are closer to support than others. It depends what chart you're looking at, but they're all below, which means they're synchronized in a move lower. And then finally, the chart that I kind of forgot to mention until now, let me just pull that one up. The one chart that's really giving me a lot of concern, anxiety, you might say, is this chart right here. Sorry, not this one. The 2-year note is down on the day. It's back above 5. The one that really gives me anxiety, though, is this one here. It's the 10-year note being back above that 4.35 area. And if this is going to be the start of the crash, it's the signal I was particularly looking for. So it happened in 2018 in January, happened in March of 2022, and now we're doing it again right here. And this looks like it was a trap. The week's not closed out yet, so we cannot say it's over, but we tapped it, we backed off, and then we advanced over it. That's really notable. And it's really notable because we have a golden cross here, and we bounced every time we hit the 50 moving average. I don't like saying this. This is where what I thought was going to happen is starting to be wrong. That's right. I'm admitting I was wrong, but that's not clear. So if we go to here, the hardest part for me when I listen to that Bruce Lee quote is to be formless, be shapeless, be water. Well, that's easy to say. It's pretty hard to do. And the way that I was able to alleviate this, and I went through this with our group this morning too, by the way. So if you want to see exactly how I'm positioned, all my holdings, you can join us for 14 free days to trade with me, Justin from YouTube. You can go to thealgo.com. But I'll tell you what I told them this morning. Ask yourself, in hindsight, are you going to regret not participating in the rally higher or this move right here? Or are you going to, let me actually delete everything, make it easier. If this is happening, are you going to regret this more? Meaning, are you going to have FOMO if we do go to 560 on SPY? Or are you going to regret not selling before we ultimately fade back down to, like, say, 4,000 or 3,850? If you're going to regret this one more, you position differently than if you're going to regret this one more. The other part, which is really important, like Bruce Lee told us, where's that quote? Make sure you understand what you are. A cup, a bottle, a teapot. What are you? Are you a trader? Are you an investor? Because those ones use very different strategies. Why? Because that's how it works. It's that simple. So if you're a trader, trade the trend. Look at the daily chart. We got gaps. We blew out the low. Short it. On the flip side, though, you have to understand whether you're a trader or investor. And as much as you want to go towards pleasure, it's important to avoid pain. So know which one you're going to regret more, because things don't always go our way. You can plan the work and work the plan, but you can still end up being wrong. Your thesis might be wrong. This might be the start of a credit crisis. I have no idea. Why? Because it's called a black swan. We don't know. It's an unknown. If we're going to keep going lower, we're going to have something else to knock us down. I don't know if it's going to be purely price action, but there's a lot of things that I mentioned recently which are finding equilibrium. So what I'll be paying attention to, I'll tell you what I'm paying attention to. I want to see whether or not we fall further into fear. I want to see whether or not we're seeing broad-based selling off. I want to see whether or not the rest of the world overnight goes lower. I want to see whether or not positioning by the end of the week goes back to being more bearish, where we've been forming lower highs, meaning they're covering. And if they start adding more, then that's fuel. What I would also note is that on the week after quad witching, we normally get a 1% decline. So we were kind of expecting a little bit of a sell-off today, but this is almost 3 times a 1% decline. We're now down by 2.7%. That's a pretty nasty cut. And if we're going to go down to 41.50, I don't think people are really going to prepare today. They're going to get scared and sell an even stronger support. So we were on support until it's not. We have 431.73 as our key area on SPY. That doesn't hold. We could be going lower for sure. So what you have to ask yourself right now, what you need to do, which is what I think I mentioned in the video, watch this one pattern and basically do this now. You need to find out whether or not right now, if we're right here, and I'm telling you that we could double the loss, we could go down by 10%. Are you going to regret this more? Meaning not taking some risk now, not buying some insurance, not taking some chips off the table? Or are you going to regret selling at the bottom before we do this? I don't know which pattern is going to play out. Why? I'm just a market participant. I'm not Mr. Market. I don't control the market. I am just here to observe and to try to adapt to the incoming data. So as the incoming data turns more bearish, like I mentioned yesterday, is it over? We have to make sure we understand that. So make sure you know what your North Star is, meaning your chart, know what's driving your psychology, and then just make sure you're positioned for the move up or down. I'll tell you what I'm doing right now to be better prepared for this. So I have 2 accounts. I have a trading account and I have a retirement account. So I'm going to act differently in both accounts. Here's what I did as a specific strategy. I think this is going to help you. And if it does, I'm going to ask you for a huge favor to please consider smashing that thumbs up and maybe smashing that thumbs up, subscribing to the channel, or maybe even dropping a comment. You guys mentioned over the last few days you like transparency. I'll be super transparent right now. I was expecting the move back down to the low, but I was also expecting it to hold. So the way I position both of my accounts, maybe I'll see if I can actually pull up a screenshot here, because I think it's one thing to say I was planning the whole time, but we'll see whether or not I actually did. I'm gonna go back in time to a note that I shared at the beginning of September. I do these weekend letters. Let me just make sure I don't overshare. All right, here we go. So this goes back to September. So if you're wondering what I do after YouTube, I'll give you a little bit of a behind the curtain right here, okay? So on September 2nd, here's a note that I shared with our group. I said, a lot of names got close to stopping out, but held. If the stops hit now, it means they likely printed a monthly lower low, which we just did on SPY. And I'm happy to dump them. Cut your losers fast. As we open September, I have a shopping list built and I'm ready for discounts. Well, now we got discounts and I'm sure people are scared. But I still prefer buying on algo alerts. Algo alerts means the chart was going down and now it's trying to stop going down. We get an alert and then we think it's going to go back up. So what that means is that my list below is very simple. I'm just looking for this thing right here. I'm looking for stocks that are trying to go back up. And there is no sign these things are trying to go back up right now. I'll share with you the note now that I did over the weekend. And let me see the one that I shared here this weekend. Let me just make sure I don't share too much. Here we go. And I'm sharing more than I normally do. So again, I'm really hoping you guys are going to leave me some comments and tell me you appreciate this, because I'm revealing a lot of my personal strategy right now. I'm doing that because I think on a day like today, people need a little bit of a helping hand. They need someone to lead by example, and I'm right here to do that. So this is from the weekend. It's from the 17th. We're currently the 21st. I said, as we get closer to the end of the month, I am preparing to buy more stocks in anticipation that my plan materializes, meaning we get a Santa rally starting in October. It's not October yet. I still don't know that I'm wrong, but I'm definitely getting some warning signs. I got yellow flags, not red flags. The last part here is the most important one. The plan is to buy on Wednesday or Fed Day and leave room to add in the next 2 weeks, meaning the last week of September and the first week of October. And this is specifically for my investment account. So what does that mean? It means in my investment account, I was expecting this to work out. I also know that I'm not going to use a stop. So what does that mean? It means I'm anticipating this is going to hold. I'm going to buy in for a long-term, multi-decade hold. And I'm just going to buy more. I'm going to dollar cost average. We come back down to here for my retirement account. Hey, cool. I get to buy at another discount. I'm happy to buy more. In my trade account, though, what I mentioned on the first note is that I need to make sure that I am buying stocks that are trying to go up. I'm going to leave myself room to add into the last week of September, first week of October, because I still think this is going to play out. I see a lot more upside here than I do downside, but I'm also not going to be blindly bullish, which is why I've only made a few buys, actually. I got about 50% investments. Some stocks have stopped out, as I mentioned. Other ones, another one stopped out for me today. I have roughly a 17, we're going to call it 20% hedge, which means that I'm actually beating the market right now because the market's down by 4. I'm down by less. That's a win for me right now for my trading account. That's how I'm looking at it. And then the final thing I'm doing is I am preserving my mental capital. Why? Because if I'm so easily pushed from bull to bear, bear to bull, I'm gonna get wrecked. Perma bulls and perma bears are pigs, and pigs get slaughtered. So what does that mean? I'm gonna stick to my thesis. I'm gonna try to be like water. I'm gonna adapt to the changing environment, but I'm also gonna understand where the risk is, and I'm not gonna trade both sides of the tape. Trading the side of the tape that was bearish was getting in at the open of this month. That's it. Or trying to short on this pattern here, meaning the lower high or the failed break last week. I did not want to do that. I wanted to buy the dip. I wanted to go short. So what that means is that trading one side of the tape is hard enough. Trading two sides is near impossible. Why? Because if you're trying to go short, you're going to have so much FOMO about, oh, I could have held on just a little bit longer. I'm going to tick the exact bottom. I'm going to go 100% short from 100% long. And that's just too risky for me. It's too dangerous. It's very difficult. And it's not something I enjoy doing anymore. So I hope you guys found value in today's video. And we're going to now push over here to the weekend review where I said the stage is set, where you can get a deeper review on how I thought the week would unfold and maybe where we're going to go from here. But if not, thank you so much for tuning in, and I look forward to seeing you tomorrow. Thank you.